So I was looking today at trading attachments. I have had a look around, and I've seen a few things on attachments and trading, but not a lot. Does anyone have any opinions on what trading attachments are?
Interesting question.
Okay. Well, in my opinion, the best traders don't see good or bad. They master their attachments. So rather than being connected, they are connected to growth rather than fear. And rather than outcomes, it is more about process. So it's the composure and the precision that comes with that actually provides success. Does that make sense?
Yeah, absolutely.
Oh, okay. So again, I will actually go through any of my programs actually are building on previous knowledge. I assume that people have actually done other trading psychology type things, and this is intended to just build on a lot of that. So if I do seem to skip over a lot of things, it will be because I'm assuming there's knowledge there. The knowledge that you have needs to be transferred to a new situation because it's not really new, it's just expanding on what you already have. Any of the information that I give, if you actually just, it gives you something to think about that you hadn't thought about before, then that's great. What I say in my sessions is really you take from it what you want and what suits you. All changes need to be made across all aspects of your life. It doesn't just happen in trading because they go across everything. The intention of all of these things is to create an automatic response, the instinctual response that happens without your conscious thought. And it's about understanding that biopsychosocial influence, because I am a neuroscientist, so that's where I come from. So I'm looking at attachment styles. So, and then the attachment styles in regards to psychology, they relate to our thought and behavior patterns. So it's not just our behavior patterns and thought patterns, but our tendencies towards certain thought and behavior patterns. It's how we develop and maintain relationships. It's our perception of risk, uncertainty, and stress, and the attachments that we make, which aren't just to people. So our attachments are made by our neural pathways, and they develop mainly in our childhood. It's through not only our experience, but our exposure that we are given early in life. And I don't know if most people have heard it, but the more it fires, the more it wires. So the more you do something, the more it actually wires in and the more automatic that it becomes. So if we're looking at attachment styles based on the psychological theory, there are the 4 separate ones: secure, anxious, avoidant, and disorganized. So yeah, secure being obviously the best possible that you have. Anxious being driven and motivated by anxiety and limited by anxiety as well. Avoidant being that you avoid things that are uncomfortable, and disorganized, basically you're all over the place. So knowing that I am a neuroscientist, I believe, and I have realized that there's people who weren't here for the first one that I did. So when we look at attachments from a neurological perspective, we look at our neural pathways and the things that have developed. Thankfully, through technology, we've actually been able to start looking at our neural pathways and the fibers within our brain. And this is actually a new MRI of the brain and the different fibers that are there. It's these things are here are the things that create our thought and behavior patterns. Recently, we have actually been able to start looking at the hubs, which anyone who has GPS, it's like a waypoint. If you get to a particular point, that branches off into different areas, and you basically get a decision on how you do things from then. If it becomes automatic, certain things strengthen and other things weaken, and things become automatic, which is when we end up with our core connections, which is our automatic pathways. So we have our particular spots where we have a choice and we have decided a particular thing, we've decided to do that so often that has become natural and automatic, and we don't even think about it anymore. If you look at a brain in an MRI, these are the strengthened pathways. So if you look at the hubs and you see how many pathways they are, you can then look at these core connections and see that there are so many, it's been so strengthened in particular areas that they come up so strongly associated with particular behaviors, which in trading basically comes down to a whole heap of different road signs that tell you where to go, when to stop, and what direction to take. How does that relate to trading? And that is like a difficult thing. So ask yourself some questions. Do you feel confident and composed when you're actually facing that market uncertainty? Do you second guess yourself? Do you actually pause and think, am I doing the right thing? Do you actually have a strategy and you have your plan, but you actually second guess your plan, even though it's actually built on information and fact? It's your trading system. Do you go out and look for reassurance from other people to see what they've done, how they've achieved their things? Are you listening to the media and people who are putting on there how much that they have made in such a short amount of time? How do you handle your losses when you make a loss? Because everyone makes losses. Do you then attach yourself to the loss, or do you actually just shrug it off and it's just a part of life? Do you compare yourself to other people? They're all things that actually are a part of trading attachments. Can anyone say that they have actually thought any of those thoughts?
Brilliant question. Please respond or participate. You learn a lot by participating.
Okay, so why do we want to attach? Why do we think attachments are interesting? Well, attachments actually inform us of our emotional bias and triggers. What are the things that trigger us for something in particular? It actually affects our decision making and our trading thoughts and behaviors. So it's not just like your initial attachment theory works on just your relationship with people and whether you're needy or not needy. But in trading, it's bigger than that. And it's also in regards to our consistency and the outcomes that we have in regards to our trading and just to everyday life. So based on attachment theory, when we look at trading, it's now based on, it actually changes. So it's secure and preoccupied, dismissive and fearful. And it works on the fact whether they're as a person who has low anxiety or high anxiety, low avoidance or high avoidance. And there's disorganized. Disorganized is a whole different story. A secure person obviously has low anxiety and low avoidance. Preoccupied is low avoidance and high anxiety. Fearful is high avoidance, and dismissive is low anxiety. Is so anyone wanting to have maybe a guess at what sort of characteristics perhaps these people, like a trader, might have if they're preoccupied as far as anxious is concerned, and they have a low avoidance to making a trade, but they have a high anxiety. Like, there's a lot that is being said about certain emotions and psychology. Anyone willing to put out there what they think might come under any of these categories?
Kerri, I would think there's too many categories happening all at once.
That's where disorganized comes in. Of course, yes, people can be more than one, but that's where disorganized comes in. It's like all over the place.
And with Kerri's presentation, it becomes so lively, unbelievable.
I think me is more like in between, like secure and dismissive.
What's that? Sorry, I didn't hear that.
For me, my disorganized is in between of secure and dismissive.
Mm-hmm.
Yeah, like Mati said, like it's not just one, but we're more like in range of one and the other kind of thing.
Absolutely.
But
Absolutely.
for me, it's like in between dismissive and secure. Like sometimes I feel very confident on the trade, but a lot of there's time that like that confident kind of kickback become like, you know, overconfident about my trading, and if it go against me, it's create a lot of anxiety afterward, or the feeling of like revenge trading.
Yeah.
But like over time, I do realize that kind of emotion trigger, and I learn to kind of like talk myself up in a sense, just like either just turn off the computer or like, you know, like stop trading kind of thing.
Yep.
So,
and that's awesome. That's exactly the type of thing that you need to do. Self-awareness is one of the biggest things that comes with psychology. Sometimes just actually being aware of your thoughts can help you make changes. If a person says to you, "Oh, you need to think differently," well, that's all well and good, but how? How do you think differently? So, and there's so many people who don't tell you how to think differently. They don't tell you how to take that step. But self-awareness in itself can be that bigger step, because if you look at those nodes or those waypoints that I mentioned before, it's in those moments when you become conscious of the decision that you have to make, and then you actually get the opportunity to make a different decision next time if you want to. So without that self-awareness, so that you can't actually do that.
one of the practice that I did to create that self-awareness is like journaling all my decision.
Yes.
Like all my like just even random thought or like desire to make a action in trade and all that kind of stuff. I try to write down, even though it's like very it can be stupid, but then like the next day when you see that, you kind of have a little bit of reflection of yourself, a lot on your kind of psychology during
Yeah,
trading and all that kind of stuff.
absolutely. Yeah, I remember I had an accident, and it was like 30 years ago, and I wrote a diary and a journal, and I had all these questions, and I actually found it the other day, and I looked at all these questions, and I was like, oh wow, I can actually answer all these now. It's really creepy and weird, but it is amazing when you actually have the ability to ask those questions and look at yourself in that way. It's and it does come down to that stoic philosophy as well, in being open and honest without judgment.
Yeah.
So if we're looking at the characteristics, or some of the characteristics of secure, it's so confident abilities, strictly following strategies, having emotional control, and being resilient. But that can also lead to being too rigid, very complacent. You become overconfident, perhaps, and you start underestimating risk because you think that you've got it covered. Preoccupied. So a person who is in that preoccupied category, because none of these are bad, it is what you do within them that can become more, I suppose, detrimental to the outcomes that you're wanting. So a person who has that preoccupied or anxiety is very sensitive to the market. They have a high attention to detail, strong belief, and they're very motivated. But what comes with that is the emotional reactivity. At times, because of that, they abandon their strategy, no matter how much they intend to stick to it. They do need validation, and they want to prove their point, and they can micromanage, which obviously leads to overtrading and things like that. Dismissive is also a very good thing. It's very independent, and a lot of traders are actually very successful with being dismissive. They're independent. They believe in their own analysis, and they don't as much listen to, Twitter, or sorry, X, or the other media, social media, the other people out there. They can be quite indifferent, so they're not driven by their emotions, that sort of thing. Very logical and analytical, and proactive. So if it's not happening and you have the ability to, well, you make it happen. But unfortunately, because they are so independent, they do have a resistance to growth. They tend to be a teacher and not as much a student. They forget that it doesn't matter how much you know, you will always learn. They have that degree of ignorance in regards to what other people believe is important, and their results end up being very inconsistent. So fearful is a difficulty with the risk reward ratio. So they want high rewards, but they don't want to risk as well. They have a really strong desire to succeed, but at the same time, they want to avoid mistakes, and they end up with a very high level of stress. And stress is different to anxiety. This often leads to paralysis because you want to make money, but you don't want to take the chance. It can also lead to a lot of defensive trading. So making sure that you want to prove a point. you have a plan, but whether you actually stick to that plan, it can be quite erratic. And eventually you end up burning out. So disorganized is like that dichotomy. There's not really a lot more to say about that. It's just basically you are the extreme. You are a part of everything, and it's the extreme on everything. People who are disorganized are usually the most creative people. They are very highly motivated and very adaptable because they are creative and they think very much outside of the box. However, with that becomes inconsistency, and they have difficulty with focus on one thing because they get distracted. There's a tendency to self-sabotage, and they're not great with risk management because they look for risk because they're creative and they're thinking outside of the box, but at the same time they're avoidant as well. So if we look at some examples, so in saying this, these are profiles I have created from things that I have found and trades and people that I have found from the internet. So there's nothing to say that these are absolutely correct. It's just an illustration of what I'm trying to tell you. So Warren Buffett is, in this particular instance, a good example of secure. In 2000, does anyone know the trade that he made in 2016 regarding Apple?
That was his first technical company, I think, IT company.
Sorry, what was that?
I think that was his first information technology related company buying shares buying.
It absolutely was. It was his very first tech company, and it was actually, I think, quite ironic because he was actually very good friends with Bill Gates at the time, and he refused to invest in Microsoft. So even though they were having a bit of a problem at the time, sales of the iPhone were down, he believed in his own ideals and his own thoughts on what was going to happen with Apple. Benjamin Graham was actually his original mentor, and in that he was saying that the short-term market is a voting machine, but the long-term is a weighing machine. And long-term, he believed that Apple was going to pull through. He did the same with Coca-Cola in 1988. Yeah, he put a significant amount into that and he came out very well. I've actually had quite a few people ask me why Warren Buffett has actually withdrawn from Apple so much recently. And yeah, obviously I'm not in their head, so I don't know. But apparently 45% of the portfolio was in Apple, which is not a great idea. That's too many eggs in one basket. However, he did make $150 billion from that. If we're looking at dismissive, so George Soros and his shorting of the English pound. So in that, he was emotionally detached. He knew what was going to happen as a result of what he did, and he really didn't care. It was about making money. He trusted in the theory that he had, but at the same time, he didn't actually attach himself to the outcome that came from that. It was about just making a trade that he believed would make him money. And I believe he made $1 billion from that trade in one day in 1992, which is quite a bit.
That's correct.
Sorry?
That's correct.
Yep. In 1992, $1 billion was huge. I mean, it's huge now, but So preoccupied. If we look at preoccupied, Richard Dennis is actually a really good one in this regard because he is a very successful trader. But in his turtle trading experiment, he was very, very preoccupied in that. He had a strong belief that anybody could be a trader if they had the correct rules. And they had the rules, and it didn't matter whether you'd had experience or not. The fact that he had an experiment was really a big indication that he needed validation of his opinion. He couldn't just go with, I believe this. During the experiment, he definitely micromanaged the people that were in there, and he moved things around to try and make it as successful as he could make it. Ultimately, he made a lot of money from that. So it was successful, but it was actually a really big sign of a preoccupied attachment style. Paul Tudor Jones actually was a really good one for fearful. His 1987 stock market crash. So, in my last masterclass, I talked about using emotions for your benefit. And that's what he did in this instance. He actually started having a fearful reaction of the market change. And he realized that things would change. And based on that, rather than just letting it happen, he realized that he needed to use that information and use that emotion to his own benefit. So he did. He had that belief that he was going to write. It was going to be that major correction. I suppose in a way he did look for validation, but afterwards, and he did micromanage, but in micromanaging in this instance, it wasn't over the top. It was actually that he constantly looked at the trade and made small adjustments as he went. And he made sure that he didn't lose more than he was able to or comfortable with losing, but at the same time, he took the risk of doing something that other people weren't willing to do or didn't believe in. So even though he isn't really a trader, he invests, and Elon Musk is very much what I would call disorganized. Anyone like to take a punt on why he would be considered to be a disorganized investor, or investor, let's say, not trader?
Is super ADHD.
Absolutely. And I will say that I am too, so I understand completely. But what sort of characteristics in his investments show that he is disorganized, do you think?
I think we need to go to the previous slide to see what is disorganized.
That's okay.
Oh,
really disorganized is just all over the place. It's just, there is no set plan. So SpaceX is a really, really good example. So is Twitter X. Twitter, he bought Twitter because there was too much censorship on it. He didn't like that, so he just bought it. SpaceX, he was really frustrated with the fact that space travel hadn't progressed. There were so many things that could have been done and should have been done, and they haven't. So let's just start something and let's just do it and go for it. And he put in quite a bit of his own money initially. I think it was 100 million straight up. And that was the first 2 or 3 rockets actually failed. So it was quite a bit of money that he just threw into it. And without thought. It was just, cool, this will be great. Let's try this. Again, innovation. The fact is that even though it may not have been such a great way of doing things, he has achieved something that other people have not achieved. Him and the people that work for him or with him have created something that nobody else has been able to achieve. And I don't know if anyone else saw that rocket come back and actually land back in the pincers, and it was amazing. It was absolutely amazing. He is very impulsive. We can see that from X, but very, very determined, because he will just keep going until he gets it right. That's it. It's the hyper focus that comes with ADHD. You just don't stop.
This is a brilliant slide.
What was actually what we were talking about before about being more than one. So a really good example is the 1992 shorter pound. So yes, he detached himself emotionally, trusted his theory, he had that minimal, but the reason he did that was because he took a moral stance against the UK actually joining the European not the union, is it? Exchange rate mechanism. That's the one. He actually had a problem with that.
I don't think George Soros has got an ounce of morals in him.
He actually, well, okay, maybe it wasn't a moral, but it was, he believed that
He saw a chance to make money and he took it. Did the same in Malaysia.
Yes, he did. And actually I noticed in 2016, when we were talking about China earlier, in 2016, they actually warned against him doing the same thing to them. Everyone's sort of like seeing what he's actually doing these days. He didn't believe in them actually entering into that. So he made his point by actually shorting the pound and proving his point. So when he was questioned, he actually increased his position, which then obviously made it more concrete that it was actually going to be an issue. He did what he wanted to do. He wanted to prove his point, and that's what he did. And he was very, very motivated in doing that. So his moral stance, the difference between a moral stance for other people and moral for himself are very, very different things. Sorry. Yep. Does somebody have a question? No?
This is brilliant presentation. Yeah, fantastic.
So that is also what also comes down to, like, from my last masterclass, is if you morally, or if you're not able to push your emotions aside, then you actually need to not trade in that. And that's basically what it comes down to. He had the opportunity to make money, and he was in it to make money, and he made money. It's simple as that. Whether we like it, not like it, he did what he wanted to do. And he achieved that. Does anyone have any questions?
Very happy with this slide. Fantastic.
All right. So when we talk about problem attachments and relationships, we're not just talking about from a point of view of the psychology. We're talking about what we're attached to. So it's not just people, but it's concepts. It's things in our lives as well. So the things that we have problems with is our relationship and our attachment to money. People who have a lot of money don't have the same attachment or same relationship to it as other people. The difference between, say, and keep in mind also this, I haven't talked to these people, so I don't know, but from the best of my research, Warren Buffett started off at 11 doing his first trade in, I think it was $11 or something. Whereas George Soros was different because he had more money behind him. So there was a different relationship and a different attachment to money in that moment and at that time. If we look at the market, it's relationships with the market and attachments in the market. So are we attached to our beliefs about what we want to achieve? Have we particular assets that we want to only trade in? I talked about Warren Buffett before with Apple. He actually, even though he didn't really want to expand into the tech, he actually did because he saw the potential in that. And even though he didn't really want to, he actually found something that he actually could relate to and he actually understood, which for him is what he needed for that. It's also what you want to achieve from the market, what you believe the market will do. It's not necessarily wrong, but as far as, say, George Soros is concerned, he doesn't believe in emotion, but he believes in how the emotion affects the market. So if you do look at what happened with the English pound and what happened with Asia, he created a belief with people that it was going to crash. Therefore, everyone else did the same thing and they sold. Therefore, it crashed. It's a cycle. You create the emotion. It's a self-fulfilling prophecy that if you've got enough money, you can create it. There is our goals and ambitions. So sometimes we can become so attached to our goals that we actually forget what we're really doing. We can actually become so attached to, I'm going to be a trader, that we forget or we don't see along the way that there actually might be a better option because we've forgotten the process of getting there. And that goal initially is the thing that has started us down that path. But in the end, it may not be exactly that. When I started university, I wanted to be a researcher. I wanted to do all sorts of things. It is far, far different from what I am doing now. But I love what I'm doing now. It's embracing those differences along the way. Control is also another really, really important thing. We look at what control we have. We are attached to whether we have control or whether we don't have control. The number of people I see in my job is, they say, oh, well, I don't have control over that, or, I have to make just an assumption that and prepare for the worst because I don't know what they're going to do. And it's better to prepare for the worst. Well, you know what? It's better to not have an expectation at all. With biopsychosocial influences, there is that understanding or that thought that, and I know that I have said it in the past, and it is a very complex thing, in that our psychological, emotional, all those sorts of things do play a part. And it's not as much that we want to be driven by it, but we want to be aware of it, but not entangled in it, if that makes sense. Does it make sense?
Absolutely.
So we need to be, it's like the, understanding that you have a fear of what's going to happen. So, okay, I'm not going to act on that fear, but I can see other people might act on that fear and we're going to run with that. It's what we attribute our mistakes to as well. Do we look at them objectively, or do we feel that we have to attribute them to somebody else because we ourselves can't accept that there's been a mistake? That also comes from how we're raised. It comes from our society. It comes from culture, religion. There's so many things that are mixed in with that it becomes a very, very complicated thing. Yeah, not even here, but in my work at the community center, I actually work with so many different religions and cultures, and actually being able to adjust to all of those things can be quite challenging. But in saying that, I do it because that's important to people and it's what needs to be done, because it is essential in them moving forward and them actually creating those changes for themselves. We also become, unfortunately, attached to our own knowledge and beliefs. What we know is the only thing. What we believe is the only thing. And, I've been doing what I'm doing for, what is it, 25 years. Wow. Now, and I learn 25 years. Wow. And I learn from everybody I talk to, even children. I learn from them. There's never a day that I don't learn something. And our outcomes and expectations. So we can't become attached to our outcomes or our expectations. It is what it is. It's, not my monkey, not my circus kind of thing. It's not my problem. Some things are not my problem. I can try and understand them. I can try and help people with them, but you know what? They're not my problem. And you have to actually distance yourself from that at the same time. And as far as expectations are concerned, so many people actually have that issue, especially now with people talking about mindfulness and being in the moment, that they forget that the past and the future is also vital. And, with every day, we create a new past to base our expectations on. So I suppose basically every day, today, is a new past for a new future. And it's remembering that today is a different day and we have to base our expectations of tomorrow and the future based on that. So just the fact that you've attended this masterclass, whether you agree with what I've said or not, whether you agree with any of it, the thing is, it's given you something to think about. And that then will in itself make tomorrow different when it comes to decision making and your different opinions.
Extremely true.
Does anyone have any questions at the moment?
So we always say with the financial cycle. So it's somewhat the financial cycle. I think financial needs come first, then the growth and all those things, isn't it?
It's a difficult thing, and anyone who has bills and has a mortgage and has kids or any of those sorts of things, we're so restricted by what we know needs to come first. But we need to look at what we do have that we can work with, not what we don't have that we can work with. It's a different way of thinking. So if we're looking at trading, none of those styles or none of those attachments are bad. They're just different. So looking at them, if you look at a secure attachment, we're looking at issues being overconfidence and complacency. You become so overconfident and so good at what you're doing that you just forget to actually look at your risk management and different things like that. You underestimate risk, you underestimate emotions, you don't actually pay enough attention to them. You can sometimes become sometimes over diversify and spread yourself too thin. When you think that you're cool and you've got everything covered, you can become very resistant to change. So it's a matter of balancing trust yourself with feedback. So if you're looking at how to actually incorporate, if you are, say, a secure attachment style, how do you actually incorporate this? So you always review your strategy against the changing market. Always review it against the changing market. Keep a journal for reflection, and you set your maximum risk a day. So it could be, 1 or 2% of your equity every single day. That's it. You lose it, you don't go any further. You talk about a lot, plan your trade and trade your plan, and don't deviate. And having realistic process orientated goals. And that is the most important thing, is that it's about the process. It's not about outcomes. So looking at preoccupied, tend to be overthinking, analysis paralysis. We get so caught up in our analysis that we forget to do anything. Emotionally reactive to loss, especially. Letting go of losing trades. We tend to, perhaps hold on to things that we should be letting go of, regardless of the fact that we've actually, set our exits and we've settled things, and we just won't let it go because we just can't. We've stuck in there for so long. That also goes with over-attachment. That's when we actually perhaps become too attached to something, one of the asset types, or a type of market or trading style. And self-criticism and the fear of missing out. So again, need to look at process orientated goals, not outcome. And that comes across everything. Choose a market style that suits your capacity for focus and your lifestyle, because people forget that. They would just want to do something and they forget what will fit into their lifestyle. Creating an unambiguous rule for their trading, for their entry and their exit, it takes away the anxiety that comes with that, because it's just a basic set. This is what happens. And using charts as a reminder of what you need to do. So you don't forget, you don't actually become that, oh, I can, like, this time it looks right. So it doesn't become fluid. It's just set. And the strict rules. So, 1 to 2%. That's my risk. That's it. I'm not going to do anything. Dismissive. So it's overconfidence in your own judgment. Avoidance of emotions, yourself, and any other input. Resistant to feedback because you think that your judgment is the best way. Self-reliant, suppressing stress. And, we all know that stress is actually a good thing. We don't want to actually get rid of stress. We just want to manage stress. We also neglect our risk management because we think that we're good and our judgment is fine and we don't need to worry about it. That makes people inflexible, and they don't make those changes that they need to make. So rule-based strategy that we make sure incorporates adjustment. So it's not that we will do it. Your actual strategy needs to incorporate making adjustments. Recognizing and using emotional signals, making sure that you actually use them. using the quantitative rule-based strategies, logical thinking, analytical thinking, but don't forget fundamentals. But if that's not your way of thinking, then use fundamentals to a point where you actually understand it. Use, same thing, strict rules for risk, and look at performance consistency, not self-sufficiency. Fearful. So obviously fear of failure, fear of taking risk ends up being a decision paralysis. The lack of trust in yourself and your strategy, and a person can just sit there and never make a trade and miss out on so many things because they just can't take that step. They focus on loss. It's not a what can I learn out of this? It's all about what I've lost. So when there's been a loss, there's more risk avoidance. They become more overwhelmed by market volatility. And there's hesitation to adapt because it's not that they don't want to, but they don't have the confidence in themselves to be able to adapt successfully. So having realistic goals, choosing the market that actually will suit them. Simplifying a decision making, using checklists, things like that. Take out the ability to doubt. Using your automated take profit, stop loss, it makes sure that you don't lose more than you can handle. It means that you don't actually have any sort of say or judgment in it. It just happens. And log every trade, including the emotions and especially the lessons that you've learned. So disorganized. So disorganized, emotional inconsistent. It's the dichotomy. It's the opposite. It's just one and the other all at the same time. Under and overconfident. It's emotional stability and inconsistency. It's the fear of success and failure at the same time. It's impulsiveness and hesitation. The chaos can become quite overwhelming and basically just shut down because you can't do it anymore. The chaos actually makes it difficult to review your mistakes because it's difficult, it's overwhelming, and it makes it difficult for long-term consistency. So the best way to do this is to create predictable framework, reduce the complexity of everything you do, have a rationale for everything so it makes sense, it's logical, it all makes sense in a line. Simplify all the decision making, use the automated stop losses, profits, and adjust the risk management to suit the risk aversion and risk seeking behavior. So I talked last time about my little turtle traders. I love my turtle traders. So Jerry is considered to be a secure trader. So the things that he could potentially have issues with, or the challenges that he could have issues with: overconfidence, complacency, underestimation of emotions, the things that we talked about before. And he recognized all of those things. And as a result, he made sure that he had no attachment to things. He listened to the emotions that he had that came up. He showed gratitude for everything that he had, which then helped him with that, working with what he had, not with what he didn't have. He used a lot of grounding techniques, and he selected his family and outside factors that helped him maintain those things. So even though he was a secure trader, turtle trader, so he was very, very rule based, he adjusted and he adapted and he overcame these things, pretty much all of those things. So he changed his confidence and complacency by changing how often, like that rule on, okay, well, if I have 3 wins or losses, I know that that's going to cause me to have an issue, so I'm going to just not do anything after that. He gave himself his limits for the days, weeks, and month, which helped him make sure that he actually stayed within his limits. He changed how much risk he was willing to take to make sure that he was able to be happy and comfortable with where he went from there. And he used his trailing stop losses. He still used the rules, but he used the trailing stop losses, which then actually helped him maintain the balance and profit that he made. Does anyone have any questions?
And what about the other turtle, that fellow who lost it?
Well, he became overconfident. He became complacent because he believed that he knew better. And he actually stopped using the actual rules themselves. He didn't follow the rules in the end, and he decided that he didn't believe that he was wrong and he didn't need to listen to anyone else. And so no feedback either. He did over diversification. He went into he had his finger in too many pies, and it all went badly. So really, even though he actually does come under that secure trader profile, he actually, even though he started really, really well, his change in those aspects actually was his downfall.
So true. I was told that he actually lately he was trading from his guts. He forgotten all the rules.
He was trading from his what? Sorry.
GUTS.
Oh, well, I was actually corrected once, not long ago, that he couldn't have been bankrupt because he had the book and he was still getting royalties. So, okay. So, does anyone have any questions in regards to any of that?
Is it possible to change your personality?
Yes, absolutely.
Right.
Well, I mean, it depends on who you talk to. For some people, the personality is a whole bunch of traits, and of course, traits can change over time. Yeah, people talk about growth mindset and things like that, and a growth mindset. Everyone has a growth mindset because you can build neural pathways. That therefore you've got a growth mindset. When you become aware of different decisions, when you become aware of things that you want to change, then you're able to change things because it becomes more of a conscious decision. It's like, I don't know if anyone else has had them, but the choose your own adventure book, you get to sort of like that page and you can decide what you want to do at the end. And it's when you bring that into the conscious mind, then you can actually think about it and make changes as to which direction you want to do, which direction you actually want to change things to. So yes, you can change.
Thanks, Kerri.
Thank you, Kerri. Yeah.
Well, I do understand that it is very difficult to ask a lot of questions, especially regarding psychology, because this is recorded and it goes out to whoever wants to look at it on the internet. So if people from the masterclass actually do have questions that they want to ask, or things that relate to them personally, then without actually any cost, welcome to contact me, and I'm happy to have a chat and see what I can do to help. It is one of those difficult things, especially when it's going out to any number of people.
This is a fabulous one-time offer. This is fantastic. So the first session with Kerri would be free of cost, thanks to Kerri. And that first session itself can actually help you convert you from a learning trader to be a consistently successful trader. Thank you, Kerri, so very much for your kindness and for your free offer for the first session, which will be probably for 1 hour. Is it, Kerri?
Yeah. Yep.
Yeah, 1 hour free session with Kerri, can think of. And she will be handling your personal questions, will not be recorded, not be in internet. So feel free to take this opportunity. And Dario says, thanks, Kerri, for the wonderful presentation. It is indeed wonderful. Not only the presentation, yes, the presentation itself, as well as the insights which we got. And this is our opportunity to learn from an expert who is a scientist. And Viet says, thanks for offer, Kerri. Yeah, I hope. And because more and more, Akshay says, thank you, Kerri. Because more and more nowadays, we are getting two queries, one for the psychological part of it, and the other from the cryptocurrency, because Bitcoin is jumping.
Yeah.
Whether Bitcoin is jumps or not doesn't matter. Psychology will stay. And we remember Munehisa Homa, the father of candlestick, wrote a book in 1755 on psychology, in which he said psychological part of the brain is very important. So that was 300 years back. And now we have, even now from 30,000 years from here, the psychology would be interested. No matter what AI or the black box is doing to us. Don't go for any AI, because it is a black box. You don't know what it is, what it is designed for. You don't know the ability of the person who has designed it for. So don't go for any black box. Take help of Kerri, sort it out your problem, and then we'll all be fine. Thank you very much for your time on Sunday. And thank you very much for Kerri and Marty for your wonderful presentation. Thank you all, and bye for now.
Thank you.
Thanks, everyone.
Thank you.
Have a good year.
Thank you. Bye bye.
Okay. Bye.
Thank you, Kerri, Marty, and Partha for the
Thank you,
session.
Harry. Thank you.
We will meet again next month.
Yeah, absolutely.